Well, good afternoon, everyone. I'm going to go ahead and turn on the screen here, and we might just wait a minute more to see if we have some other folks join. But I can start with some of our logistics to begin with. Welcome to the American Riviera Bank webinar on PPP Loan Forgiveness. If any of you attended a couple of weeks ago to our first one, a lot of our content today is going to be the same, but we are going to give you a preview of what the online application will look like and address some additional information that's come forth from the SBA since we last met. I'm going to go ahead and start my video or start my screen share to go forward here. And I just encourage you all that if you do have questions, you can use the chat functionality in the Zoom application. I can get the screen to move forward. There we go. This meeting is being recorded, and we're going to post it on our website in case you are multitasking, or in case you have anybody that you know that was unable to attend today, or in the event that you want to go back and revisit anything that we talked about. Please, as I mentioned, do type your questions into the Q&A box. I'm going to try to move through this a little quickly so that we have some time at the end to answer the questions. But I do want to point out that if we don't have time to get through all of the questions, either the ones that you post here today or the ones that you've sent us in advance of this webinar, we will be following up with all of you with answers to all of those questions. In addition, I highly encourage you to check out our page on the American Riviera Bank website. If you go to the top of our homepage, there is a orange terracotta banner at the top that leads you right to our PPP page. And right there, you can check out our FAQs. We tend to update those at least once a week, if not more, depending on what the SBA is doing at any given time. And they've been a good resource to a lot of our clients. So I highly encourage you to use that resource. I do also want to point out that this webinar is intended only for educational purposes. We're not really in a position to provide legal or tax advice, and we do encourage you to speak with your professional advisors in order to address any specific questions or interpretations. Now, that said, we as an SBA lender under the PPP program do actually issue a decision on the forgiveness amount that we believe you qualify for, but we can only do that by receiving a full, complete application from you. We've been receiving a lot of hypothetical questions, which are great, and we're happy to answer them as we can, but we really can't tell you you will be fully forgiven on your loans until we see all of your data. So I just want to encourage you to use this information for educational purposes and to prepare you for when we send out that application. So what we're going to do today is we're first going to go over a brief update on the latest changes. The changes seem to happen by the hour as of late. You may have heard, you all have PPP loans, but you may have heard that there was an extension of the application period to August the 8th. So you can now still be submitting PPP loan applications under that extension. For those of you that are here today, though, you're likely more interested in how do I get my loan forgiven? What are my eligible expenses? What sort of documentation do I need? So we plan to also go over those factors today. What might impact your ability to be fully forgiven? What records do you need to maintain? And also the SBA and their loan review process and how that might affect the timing of when your forgiveness application might be approved. Okay, so quickly let's go over the timeline as it is to date, and it's already out of date. There's been several other key dates to follow. But as you all know, the CARES Act was signed into law on April the 2nd. At that time, we were told that you must spend 75% or more of your loan proceeds in order to attain loan forgiveness on your payroll costs. We know that that's been a moving target, and that a lot of FAQs have come out since. I think we might be up to 21 or 22 interim final rules following that very first one on April the 2nd. On May the 15th, the SBA released the loan forgiveness application. At that time, it was an 11-page form that introduced some new requirements. So it took us a little bit of time to get through all of that and figure out what it meant to all of us. If that wasn't enough, then on May the 22nd, there were 2 more interim final rules. One on loan forgiveness that clarified the documentation that would be required in order to be forgiven. And the second was a new one. It was an SBA loan review process that basically changed how everybody was assuming these loans would work. We were assuming that that only loans over $2 million would be reviewed by the SBA because they came out with guidance that said that they would be reviewing every loan over $2 million for eligibility to make sure that that business was initially eligible for that. What they did in this loan review final rule is they clarified that no, a PPP loan of any amount can be reviewed at any time, and they won't just be looking at whether or not you qualify. They'll also be looking at the original loan amount that was granted and potentially whether or not you qualify for the forgiveness amount that you've stated on the application. Now, I don't want that to scare anyone. While they can review any loan amount at any time, it's likely going to be some other indicator that would cause them to do that. But the reason I bring it up is because they do allow themselves 90 days to take a look at a forgiveness application before making their decision after the bank submits theirs. And then as we all know, on June the 5th, everything changed again. The PPP Flexibility Act was signed into law, and it gave us an alternative from the original 8-week covered period to spend your loan proceeds to 22. So that was definitely a change in how things were going, and it made life a little more complicated on the back end. It's created a lot of questions with regard to caps and maximum amounts and all of that, and we do plan to cover all of that today. I'm seeing in our chat that we have our first question. When do we expect to receive the custom link to the forgiveness application? I purposely didn't answer that yet because I was waiting for folks to join as we went through some of the preliminaries here. We do not know yet. We are all ready to go on the back end. As you all saw from an email that went out, we do have a forgiveness guide that we've put together to help you in preparation for that link to come so that you can apply for forgiveness. But unfortunately, at this time, the SBA still has not made available the portal that we need in order to submit the forgiveness application to the SBA. That said, we work with a third party on these PPP loans. They're a fantastic resource for us, and they do a great job. And they have assured us that as soon as the SBA is ready, they have a very close working relationship with the SBA, and they will be ready to hand off your application to the SBA as soon as the SBA is ready to receive them. Okay. Moving forward, one of the things that changed when the new application came out is the forgiveness formula changed. And the forgiveness formula changed because of the PPP Flexibility Act that we talked about on June the 5th. And when we saw the application for the first time, we noted that now it's down to 60% or more of your forgiveness amount that must be spent on payroll costs in order to qualify for partial forgiveness. The reason I say partial forgiveness is I really want to make it clear, just because you spend 60% on payroll doesn't mean you automatically get forgiven. There's a lot of misinformation out there on the internet and in the media. So we're trying as hard as we can to make sure that everybody understands that that's the first kind of threshold. Now, if you're not going to spend 60% or more of your amount on payroll costs, then you don't have to spend the full amount of the loan. And in that case, what you would do is you would be forgiven for the qualifying amount. You'd have a little balance, but you won't have spent it, so you would just use that to pay the loan back. You would use the proceeds that you have not yet spent to pay the loan back. Otherwise, you would carry a balance for that other amount at the 1% rate over 2 years. If you did get approved by the SBA after June the 5th, it is automatically extended to 5 years. But what we're going to do for the rest of you that were before that time period is we're going to work with you to see where you are on forgiveness first. And then if we need to, we can negotiate with you the 5-year term. But that won't be an automatic thing because we really feel like, based on what we're hearing from our customers, that you're all doing a good job understanding how your loan can be used and maintaining your documentation. We've got such diligent borrowers, and it's been just a pleasure to work with you all in this process. As I mentioned previously, the covered period was also extended to 24 weeks at your election. So anybody that was approved before June the 5th can opt to continue to use the 8-week period. Personally, I'm not supposed to give recommendations, but I would recommend using the 8 weeks, just watching how much the rules change week after week to get it in and done. If you've spent the loan the right way, you might just want to get it done and make sure that we get you moved forward as soon as the SBA is ready to accept those applications. Now, that said, there are a lot of you that are impacted by COVID in a way where you can't restore your employment or your wages or your salaries in the way that you'll need to get full forgiveness. So the good news about this is with the Flexibility Act, it did extend to 24 weeks at your option, which provides you the ability to restore your employment and your wages and salaries to December the 31st. You may still elect to use June 30th under the prior rule if you want to get forgiven sooner than that. Let's see, there are definitely some exemptions to think about. So I've had a lot of questions from customers who were unable to maintain FTE at the pre-pandemic levels. There are some exceptions for having to restore FTE. Number one was unable to rehire individuals who were employees. We will go over a little example later, but if you're unable to hire the people that were previously on staff and they've denied your offer for employment, you do need to report that to your state unemployment office as a condition for qualifying for this exemption. You must also have been able to prove that you couldn't hire similarly qualified employees on or before the 31st of December. But there is this new caveat in the rule, which you'll see in better clarity in the application that we're going to take a look at. There's a new caveat to this where if you were unable to return to your pre-pandemic levels of business activity, say you're a restaurant and the restaurant has had to resort to takeout only instead of serving in the restaurant, you obviously aren't having the same levels of activity. So if you have reduced staff for that reason, all you need to do is provide us with a copy of the latest state order or Santa Barbara or SLO County order that shows that you are impacted by a restriction from a government agency, and you would qualify for that exemption. All right, I'm taking a look at some of the questions. What I'm going to do, I am being asked if we're going to preview the forgiveness application with our customers. So you must have read my mind because here is the live answer for you there. We're going to give you a quick preview today of our online portal to see what it all looks like. We can't take you screen by screen through the whole system because it would take far too long. But I do want to encourage you, as much as it must be nerve-wracking to wait, once you log into the portal, it really does take you step by step through the whole process. A lot of it will auto-complete based on how you fill out spreadsheets. So I do encourage you to wait to see that application before you make yourself crazy with completing new spreadsheets or creating your own work product. The very first thing that we indicated that you should do in that application when you get your link, well, first of all, you'll establish a PIN. One of the other questions I had is, would the owner of the company be able to review it before I submit? And yes, the answer is yes. What you would do is you would submit, you would forward the application to anybody that you wanted to review it and provide them with the PIN. It doesn't allow them to see confidential data like Social Security numbers and things like that, but it will allow them to see the data to make sure it's all accurate and covered correctly. So that'll be the first step. Once you're logged into the portal, we want you to go in first and indicate the frequency that you pay your employees and whether or not you are going to use the alternative period. Prior to this, you will also be indicating whether you elect the 8-week period or the 24-week period. The reason why that's important is that depending on which option that you use, it will automatically calculate your covered period based on what you select. So what you see right here is the 8-week covered period payroll information. And because you elected 8 weeks here, it's going to populate with your loan disbursement date as we know from our core banking system, and it will automatically calculate the end period for that. If you were to elect 24 weeks, it would automatically calculate that way as well. Now, it's really important that you also select the frequency that you pay payroll to your employees. The reason for that is there is an alternative payroll covered period that you can use that allows you to start not at the date that we fund your loan, but at the date on the first pay period following when we funded your loan. So it'll just basically give you another week or 2 weeks in order to start your covered period to make sure that you capture enough payroll. But it has to be a situation where you're at least biweekly. And the reason is there's obviously going to be more cycles for payroll in those scenarios than if you're just paying twice a month or something along those lines. Okay. What it'll do here, as you see, is if you choose the alternative pay period, you choose the date. That's why it's not grayed out. You would key in that first pay period day following the loan funding, and then it would automatically calculate your 8 weeks or your 24 weeks if you'd like for that. Okay, FTE reductions. We have a lot of questions about this. It's really important to know that you do have some exemptions for FTE reductions, which we're going to go over. It's our hope that a lot of you won't even have to get to this point because you are going to qualify for one of the other safe harbors, or if you've been able to maintain staff within certain levels, then you'll be able to qualify for forgiveness anyway. If you don't, what they do is they would calculate the percentage difference in your prior staffing level to your current staffing level, and then they would reduce your forgiveness amount by the same proportion, if that makes any sense. Off to the right, this is a question that comes up quite often. There is a lot of information in the rule and the application with lots of dates. And those dates all ask you questions about FTE count or number of employees, all at certain dates, all at certain covered periods. And what I want you to take away from today is don't make yourself crazy over it. If you fill out the application the way that we're telling you to, it will calculate all of this for you. But one of the things the application asks for is the number of employees you had at the time of your loan application. It's then going to ask you the number of employees that you have on staff at the time of your forgiveness application. Now, this has nothing to do with your FTE reduction numbers. This is a separate thing. That said, you may, when you applied with us, have used an FTE calculation of sorts in order to come up with your number of employees. I did hear that some people counted every employee that was, 30 hours or more because that was IRS rules for calculating a full-time FTE. Some people just did, a summary or an estimate, maybe a 50-person head count, but weren't exact. You all probably did it a little bit differently. What we're trying to encourage you all to do is just be consistent in both of these methods. So whatever method you used at application, use the same method right next to it in order to come up with your employee count at forgiveness. And don't worry about the calculations for FTE reduction that'll come later in the applications at this point, but just maintain consistent with what you do here. Now, another problem is if you did estimate your employees at time of application, you will have the ability to go in and correct that when we send you the online link to apply. But it will pre-fill from one of your applications. I think what it's doing is pre-filling from your original application, not necessarily the final one that we approved. So just make sure that these numbers are correct when you get your first email from us, which will be asking you to verify some information. Your first email from us will actually be not the portal, but it will be through Adobe Sign, and it will be asking you to confirm your information so that when we send you the link, it'll be accurate and up to date. It'll also ask you if you have independent contractors and if you have multiple owners. And again, these radio buttons will all help you navigate through the rest of the system. It's all dynamic, and it will all shorten and condense the application based on what you ask. We have a question in the chat. Let's see. We have a semi-monthly pay period. Can a pay period 2 months be considered as an equivalent to an 8-week period? I would assume so. I can't see any reason why it wouldn't. I think what I'm understanding is there'd only be one payroll during that 8-week period. So that would be the case unless you elect 24 weeks, in which case you'd have multiple pay periods. But yeah, what you would do in that drop box under the payroll information is you would select the frequency that you pay things out, and it'll automatically calculate all that for you. And again, you can either, no, I guess in this case, you would have to elect the day of your loan funding as the start to your pay period because you're not doing it bi-weekly or more. Okay, documents to evidence FTE will include payroll tax filings, typically your 941s. Again, on this particular screen, my guess is what the SBA is doing is they're just using this to calculate data on how many employees you had in effect when you applied and how many you have at forgiveness to show any kind of growth in those numbers because they like to have statistics on how well this program is supporting the workforce. It's the biweekly versus semi-annual. Oh, that is a good question. Okay, is the biweekly versus semi-annual based on the prior to PPP loan or during the PPP loan? So we're going to go over that. I'm going to table that question for right now because there are different reference periods that you can select. So we'll go ahead and take a look at that in a bit. I'm going to try to stay away from answering any real specific questions in the chat. If you could use the Q&A functionality, what we can do is we can address those questions individually one by one, and we'll give you the very best response in writing in that way. Okay, the loan forgiveness application. So we went over the fact that on June the 5th, things changed for us. One of the things that happened is they issued not one, but 2 forgiveness applications to replace the one they had issued previously. And if life wasn't more complicated, things got a little bit crazy with now 2 versions of the application. To make it kind of easy to understand, that full application has to be used anytime you have reduced your wages or your salaries of your employees, those under $100,000 or those making less than $100,000 a year, by more than 25% of pre-pandemic levels. And I went through that very quickly, but I'm going to encourage you that on the next couple of slides, we'll take a look at how that's going to come into play and what those reference periods and those timeframes are, because again, they're different for just about everything. There's a lot of dates and employee counts that you're going to need to put together. I highly encourage you, again, go to our webpage. At the top of the PPP page is our borrower guide for forgiveness. And in that borrower guide for forgiveness, the first couple of pages are just dedicated solely to letting you know what you need to gather in order to effectively complete the application. Okay. As I mentioned, we do have an online portal in order to take your forgiveness application. The very best thing about it is it provides you with a downloadable Excel spreadsheet to key in all of your employee data, your salary data, and when you upload that completed worksheet, as you see at the top of my screen here, it will automatically populate the SBA application. So what I'm sharing with you here right now is the SBA application, and then what you would do is you would go next to each of these line items and upload your documentation. So it should make life really easy. The nice thing about this is it will speed up our process to turn around your review much more quickly than you emailing us documents and the like. The one other thing that I would suggest is if you see next to each of these lines, again, this is what the SBA application looks like. I like to think that ours is a little bit prettier. Theirs is pretty government issue. But next to it, you see all those question marks. Each of those question marks, if you hover over them, it's going to give you a whole lot of great guidance about what they're looking for in each of those factors. Okay, so I would suggest to use our FAQs, use our borrower guide, and then rely on the system to help guide you through the process. If you just stop and take a minute to understand it, it will really help you get through the process if you're the one that's lucky enough to fill it out on your own. As I mentioned, your supporting documentation can be uploaded right here. It is fully secure. As I mentioned, you'll have a PIN to access the system, and it's a fully secure online portal, and it's a vendor that we have vetted very carefully ourselves. being very cyber aware, and you know, the chief risk officer running PPP applications initially, you're going to do everything kind of with a risk bent on it. So you can be assured that your data is going to be secure that way. And especially in this day and age, you do not want to be emailing us documents. If a fraudster were to ever get a hold of your email account, they basically just go through your sent files or your inbox, and they search for the word bank, and then all of a sudden they've got all of your confidential data just right at their fingertips. And you know, first email compromises, now Twitter's been breached. It's just every day something new. So really, truly encourage you to use the security of this online portal to do your uploads. The other good thing that happened is, as I mentioned, there were not one but 2 applications issued. The easy form is going to make your life a whole lot easier. You keep hearing about the Schedule A worksheet. It's this Excel workbook, and it's all kinds of data points. And while we're making it really easy by giving you a downloadable Excel spreadsheet, it's even easier if you qualify for the easy form. It's available for self-employed with no employees. Also for other businesses who have not reduced their wages or salaries above that 25% threshold that we spoke about. As I mentioned, you can download the spreadsheet and fill out the data. I'm just giving you a little teaser here so that you can see, because a lot of people have asked, you know, what do I need to fill out? This is not intended for you to go away and create an Excel spreadsheet on your own. The reason that we haven't emailed that out to all of you yet is because the rules keep changing. They change by the minute. We really want to encourage you to go download the Excel doc direct from the portal, because it will be the most up-to-date and current one. You fill in the data, and when you upload it again, as I mentioned before, it will automatically populate all of the application. So you really do want to use this Excel spreadsheet. We won't be able to accept them mailed via paper. We won't be able to key in the data for you. Again, you want to assure yourself when you're certifying these documents that it's truly you that has opined on all of this, and it really should be something that you're comfortable with. The reason I did provide this today is because I feel like it gives you a good idea of the compensation that you'll need to key in for the different reference periods. I'm going to go over this in a little bit more detail on the next couple of slides in terms of what data you need to get together. But I thought this would provide a good help for you to know what all is required. Again, this is only if you're doing the full forgiveness application. This is if you reduce wages by more than 25%, then you are going to need to fill out all this data. Okay. So what do you need to gather? If you did reduce wages, what do you need to gather? First of all, you're going to need your full-time equivalent count. Here's where the FTE comes into play. Again, remember before it was just your employee count. Now it's true FTE. It's going to be one of the following reference periods. We encourage you to complete the data for both, because the system will automatically tell you which one you should use to qualify for the largest forgiveness amount. So the 2 reference periods are February the 15th of 2020 through June 30 of 2020, or you can use the pre-pandemic levels, which are January 1st, 2020 to February 29th. Okay, you will also need to provide your average FTE between the 15th and April 26th, as well as the total FTE in the pay period that includes February 15th. I don't want you to worry about the whys. Just know that this ties directly to the rules in the CARES Act and the forgiveness rules, and it will help you when you populate this information, and it'll determine your calculation. You're also going to need to provide a list of your employees with their salary, and you're going to do 2 worksheets within the tool. The first worksheet is going to ask you for a list of your employees who made less than $100,000 for all pay periods combined in 2019. So you would key in all of your employees with less than $100,000 for the whole year. You would also key in any employee who was not employed in 2019 that you are now employing in 2020, because that will get keyed in later in a different place. And then the second spreadsheet, you're going to key in all those employees with more than $100,000. And you might remember from the original loan application, the reason that we do this is you're only eligible for a loan amount for the first $100,000 of those employees prorated for the period of time that you're looking at. So the old rule, it was about a $15,000 cap for all employees. There's a little caveat to that, which I'm going to cover in just a minute. So I'm going to append any of those questions for just a minute. Off to the right, you can see, again, we still have those little question marks that you can hover over. It tells you what dates you're going to be using. You can check the box. It'll automatically tell you whether you qualify for an exemption from having to restore your FTE based on how you answer these questions. And again, where you see the grayed area, it's because it's pulling it in automatically from the other calculations. How do you calculate average FTE? This is probably old news to you all, but you can either take your total hours worked and divide them by 40 hours, or this is alternative period if you're not somebody that manages data with all of that, that you can assign 1 FTE to all employees who work full-time and a half an FTE to employees who only work part-time. That might be beneficial to people who have some, you know, I don't know, some employees that are working 25% or less at the time. Maybe you've got a whole bunch of them. You might want to choose this alternative option. But there was a lot of confusion because they never came out and said how to calculate FTE in the original rules. And everybody assumed it was going to be dividing by 30 hours because of the IRS rules. And instead, it's actually dividing by 40 hours. Okay. Do you qualify for the easy process? Because that probably just caused a little bit of anxiety. But again, don't worry, we've got you covered. We'll continue to provide support as we can, and our FAQs are online if you ever need help, and you'll be assigned a specific officer to evaluate your forgiveness application when we send those links out. But if you do qualify, I would highly suggest that you check the box. So it'll ask you to confirm your easy eligibility. You check that hyperlink. This form off to the right will pop up, and based on whether or not you can check one of these 3 areas, it will allow you to use the easy form. Okay, so there's 3 scenarios. As I mentioned before, if you're self-employed and you had no employees during the period, you're good to use this form. Or if you're somebody who did not reduce the salary or wages. Very important to note here. There was a lot of confusion about the reduction in wages. It's important to note that that reduction in wages is not in the aggregate. It's per individual employee. So you actually notate any employee where you reduce their salaries or their wages by more than 25%. So it is individual employees and not in the aggregate. So if there was no one, or maybe 1 or 2 employees that you reduced, but for the most part you didn't, that actually helps you out here. But you also need to prove that you did not reduce your FTE during that end of period. And remember, if you're choosing 8 weeks, you have until June 30 to restore your FTE count if that's what you're going to do. And under the new rules, the Flexibility Act provided you the ability to use the 1231 figures to restore your FTE in the event it takes you longer to really come to full capacity. The other option is that you didn't reduce salary or wages and you were unable to operate at full capacity because of government mandate. Now that should really help out a lot of you. We've all been, especially in the Santa Barbara County here, we've all been under restrictions because we're kind of on the state watch list for increased cases. And because of that, because of any ordinance that you're complying with, all we need to do is upload a copy of the order, and you would qualify under this criteria. But again, remember, this is only in play if you did not reduce the wages of individual employees. Okay, so how do I maximize loan forgiveness? The first thing you want to do, of course, is ensure that your loan is only being spent on eligible expenses. And when I say eligible, obviously payroll has to be 60% of what you spend. But there are other eligible expenses that you need to take into account because anything that's not eligible is going to affect your forgiveness amount. We're going to go over what those eligible expenses are. And again, if I'm speaking quickly and you don't want to watch a playback of this later, please do know that we do have this baked into our FAQs on our website, and we're always happy to add more if there's a question that you think that we haven't addressed appropriately there. We want you to continue to collect evidence of your expenses until we get you this link to your online portal to make sure that you're all ready. And that's why we provided that borrower guide, so that you can see what you're going to need to maintain and how you're going to need to keep it and report on it when we send you the application. And remember that it's not just the 60%, it's also your FTE count and your salary reduction, unless you haven't reduced salaries at all and you qualify for the COVID order, in which case you're likely to be in pretty good shape for full forgiveness. Okay, so what are qualifying expenses? Well, obviously payroll expenses. And I'm going to clarify this here. This came up a lot as a question in the last webinar, partially because we were still waiting on final information from the SBA at that time, but partially because what the 24 weeks did is it confused a lot of people to thinking, oh, now I can get more money per employee. Oh, now I can get a second PPP loan because now I can get 24 weeks of coverage. That's not how it works. What it does is it still limits you to the 2.5 times your average monthly payroll that determines your original loan amount. So that has not changed. That's still 2.5 times your average monthly payroll. What changed is in the forgiveness calculations, there may be situations if you use 24 weeks where an employee making $100,000, just under $100,000, is actually getting paid out more than this $15,000 cap that existed. That said, the only time that you would be seeing that is if there was another employee somewhere that wasn't being paid, right? Because obviously, when you're paying someone over 24 weeks, it doesn't matter that you have 24 weeks to spend it. You still only have that loan amount that you were given at the beginning to spend the money. And this is sounding really complicated, but I do have an FAQ coming up in a minute that I think will help to address this. So what are included? Your gross salary, your wages, commissions, tips, anything that you're going to report on your 940 with your quarterly reporting for tax purposes. So those of you that have spent your money by the end of June 30, I highly encourage you to get those tax forms filed because we will need them in order to verify that you qualify for forgiveness. The 941 will give us the employees. So do make sure that you're moving forward on filing your taxes for that. If you haven't paid taxes, the SBA will not allow you to be eligible for an SBA loan. And while they haven't come out and said it, I'm sure it's going to impact your forgiveness too. So make sure that you're ready to go in that regard. Vacation and parental sick leave, all of that counts as well, unless that your employee is getting that leave under the Families First Coronavirus Response Act. So that's a provision whereby employees can get 80 hours of additional paid sick leave paid for by the government through a tax credit to the employer. If they are already benefiting from the FFCRA leave, you can't double count and count it again here with another government ask, if that makes any sense. Also, any allowance for separation or dismissal. So if you give somebody a severance package, retirement, things like that, you're going to be able to count that as well. We've had a question about what happens if you paid someone a bonus in the first quarter, and what does that do to impact the amount that you actually pay to employees in the second quarter? That's a hard question to answer because, again, you're going to have different reference periods and different things to take a look at. So I'm going to append that question for just a bit so that we can move through the rest of the curriculum here. Also, the employer contribution for group health, the employer contribution for retirement, and the payment of state and local taxes, but not FICA. Okay, and also for here, for an independent contractor or sole proprietor, payroll costs only include your wages and your commissions and income and net earnings from self-employment. There's another slide coming up that comes directly from the FAQs on our website that will help to explain this a little bit better. Okay, as I mentioned, I keep saying refer to our FAQs, and I just encourage you to do it because most of the questions that we're hearing from customers have been addressed here in some way. We tried to make it really easy. We've got a fantastic marketing team that created accordion style questions so that you can just expand them as you need. This is what our page looks like. You can see at the top that you can click on our current page to watch our webinar recording from June the 11th. We'll be replacing that with this one today, or I guess we'll probably add both in case you really want to watch both to see if different questions were answered. So that'll be there. We've also got a link right there to our borrower guide in addition to all these FAQs. Okay. As I mentioned, there's a lot of things answered there. This is where I'm trying to address the cap question. Okay, this is direct from the interim final rule. And if you elect 8 weeks, you can't pay any employee and get credit for them if they make more than $100,000. So the way the original rule worked, it took the $100,000, it divided it by 52 weeks and multiplied it out for the 8-week period to come up with that $15,000 to say that this is the cap on an individual employee. Okay, not every employee obviously is making $100,000. So it was just a way to show that each of these individual employees only get coverage for the 8-week period. This is a little confusing because if you're someone that's paying your employees twice a month, you had an 8-week period to pay them twice a month, so you've only paid them, 2 times their average monthly payroll, right? But the loan amount was for 2.5 times their average monthly payroll. The reason is they did want to allow you a buffer so that you had additional costs to spend on things like rent and utilities, and we're going to go over those expenses in just a bit. Okay, so what happened with the Flexibility Act? No, you don't get another PPP loan. They only are allowing 1 PPP loan per employer, and they base it on your tax ID number. So if you do have multiple businesses, each one can qualify, but you do need to make sure that you have answered the questions appropriately with regard to who your affiliates are and who your other businesses are. In the application, it will actually ask you whether or not in the aggregate, all the businesses that you applied for exceeded more than $2 million. So it's worded a lot better than the affiliate language that was in the original application to try and make it a little more clear. So what does it mean? If I elect 24 weeks, you are now capped at $46,000 for that $100,000 employee because it's taking the $100,000, dividing it by the 52 weeks, and then giving you 24 weeks of that person's pay. But let's talk about that. Let's say that you included an employee at $46,000 and you included another employee at $46,000 and the rest are all at their normal. You could conceivably be applying for more forgiveness than you actually got approved in your loan amount. And you can never get forgiven for more than your original loan amount. Again, it doesn't increase the fact that they were only intending for this to be a 2-month period for you to have payroll covered while you were trying to get your business up and running. And I know that 2 weeks or 2 months doesn't sound like enough, but this was intended to be a stimulus to effectively supplement the unemployment that was happening. And while we do not know whether or not there will be additional PPP available, my guess is no, because it sounds like they're working on another stimulus package to follow this one. So for those of you customers that are concerned because you only got 8 weeks, I don't want to give you false hope. I don't think you're ever going to get more than 8 weeks of coverage, but it could be that there's a stimulus package that follows on the heels of all of this. Okay, so again, your original loan amount was only 2.5 times your average monthly payroll cost. So you're only going to achieve this $46,000 for an employee if somebody else was reduced, because ultimately the forgiveness amount is going to be the lesser of 3 things: the lesser of your loan amount, the lesser of your payroll costs divided by 0.60, which allows you to get another 40% for other eligible costs, or the calculated amount that includes any kind of reductions for your salary reductions or FTE reductions. Okay. As I mentioned, our FAQs do include a lot of information. The new rules that came out, I think it was June 26th. I'm losing track of my days though, but they did provide changes to the May 22nd rules on forgiveness. And what it did is it gave you some caps. We always had the caps on general partners and self-employed individuals, but it also gave us specific information about how to cap C Corps and S Corps. This is straight off of our FAQ. I think there was a question earlier about health insurance. They did clarify that there's no additional forgiveness for retirement or health insurance contributions for self-employed individuals because they're already paid out of their net self-employment income. Okay, and again, I encourage you to hover over the question marks next to each of the data points you're going to fill out because it'll give you all of this guidance in one nice, neat little window next to each application item. What are the non-payroll expenses that are covered? Utilities, mortgage insurance, and leases. Now, your mortgage interest payments have to be on debt incurred before February 15th. You couldn't have gone out and borrowed something after that and had it count. It also could be your rent or your lease payments for the business on both real and personal property, as long as that lease was in existence before February the 15th. So we've had some questions about leasing equipment and things like that. It would lead us to believe, and we have not seen anything to the contrary, that leases for personal property would also be eligible under this segment, as long as, again, the lease was in existence prior to February 15th. This is covered in better detail in our FAQs. Utility payments were always in the rules. Transportation is a very obscure thing to say here. It's hard to know how they're going to calculate that. The one thing I would encourage you is don't worry too much about these non-payroll expenses. The reason I say that is the bulk of this is going to be your payroll. They're not concerned about you taking and tying out every other expense unless you're going to apply for it to be forgiven. So all you do is the other 40% of what you spend, you just make sure you have good records for it. A lot of us, rent is going to take up the bulk of all of that. Utilities are going to take up the rest of that. So you're really not going to need to get into all these other categories unless you don't have rent that you're paying or you don't have mortgage interest that you're paying and your utilities aren't happening because you're not in the building. So in those particular scenarios, you're going to want to spend some time documenting anything that you think you need to prove this out. Note that for an independent contractor or sole prop, you have to have claimed or be entitled to claim a deduction on your 2019 Schedule C in order to claim these expenses as eligible. Because with sole props, they're really using what you were paid in 2019 to determine your forgiveness amount for 2020. Covered period, we've covered in great detail. Just wanted to give you an idea for how these timeframes work. In all cases, we're going to assume a loan was originated on April 20 and funded. The end of the covered period, if you're using 8 weeks, would be June the 14th. You could submit your loan forgiveness application maybe on the 31st, assuming the SBA is ready for that, provided that you've done all the criteria, your 941s are filed, everything's all ready to go. The worst case scenario is lenders have up to 60 days to render a decision on forgiveness before submitting it to the SBA. The SBA then has another 90 days in the event that they choose to review the loan. So worst case scenario, you're good before the end of the year. I'm going to tell you, I think our process is going to make things a whole lot quicker than 60 days. So I would think that you could probably bet on maybe by well, I hate to make any bets because the SBA still doesn't have a process for us to submit. But I would guess that within 3 weeks of you having everything complete, you would have a pretty good idea from us. Even if we haven't rendered the full decision, the system's going to tell you your forgiveness amount as soon as you complete the application. So hopefully that puts your mind at ease. In the second scenario, you're using the alternative covered period, and you're using the date of your first payroll period on April 26th. This is straight out of the interim final rule. This is the example that they give. But in this case, really all it does is it gives you a different window in order to count your payroll expenses. One of the other questions that comes up often is whether or not you get credit for a payroll that happens right after your 8 weeks. And it's important to note that the interim final rule did say that you can get credit for that. Let's say your period ends on June 15th and your payroll cuts on the 19th. In that case, your pay period ended on June the 15th, but the 19th payroll includes everything up to the 15th. They did make it clear that you can count that as an eligible expense as long as it's paid on the very next payroll following the end of your covered period. And then the last example is what could potentially happen if you elect at 24 weeks. We've had questions, do I have to wait till 12/31? Based on our review of the new rule, no, you do not. If you've met all the criteria, you might just choose to go October 4th and apply for forgiveness at that point. Okay. Again, remember you're going to need your 941s, so it might be a little overzealous to say October 4th if you haven't filed for court yet. Payroll documents, this is all included on our borrower guide. It's also included on our FAQs. We've had questions about what do I do if I don't have 941s. It's still not clear if you don't have technical payroll and you don't file 941s. We're still watching for additional guidance to come out on that, but we will work with you on the documentation that we are missing in order to get that determined. Please note that your documentation does have to be maintained for 6 years. What SBA is asking for is they're asking for very little from the bank. They basically want us to give them the application and some basic information. But they say that even though they don't require us to submit it all to them, we've got to maintain it for 6 years, which is why we're having you upload it all. And we could potentially have to provide them with all of these documents that are listed here, including the FTE safe harbor, all the Schedule A worksheet information, and your documentation if somebody has denied an offer of employment, things like that. So it does have to be maintained. The reason why we're collecting it all electronically is because lenders only have 5 days to respond to the SBA if you're selected for review and they want additional documentation from you. So it's very important that we have all of that so that we can act quickly and not impact your forgiveness. This is another note to remind you that you do need to inform your state's unemployment insurance office if an employee says that they don't want to come back because they're making more money on unemployment or whatever the case may be. As I mentioned, the SBA did issue information. There was an original FAQ that said if you have less than $2 million in your loan, you'll be deemed to have been made a certification that you're in good faith. That really is only good faith you're eligible. It's not saying that you're not going to get reviewed ever. The new interim final rule indicates that they can look at you for eligibility, they can look at you for loan amount eligibility, and they can look at you for loan forgiveness eligibility. So that $2 million is only that you have certified in good faith that you need the money because of COVID-related issues. All right. As fast as I went through that, I still ran pretty short on time, but we do have some time to ask some questions. So I'm going to see if I can get through some of them before we sign off today, but I want to remind you all that we will be sending out an email to let you all know if there are common questions, and we'll give you all the answers so that you're just as ready as the next person. Okay. Temporary services. These are going to be really specific questions, but remember that the rule does provide for you to be able to rehire somebody else if an employee says no, they don't want to come back. So temps would count on that, but this is a pretty specific question, so I'm going to have to wait to answer that one. Why would it be recommended using 8 weeks? Only if you have completely qualified. If you're done, you're probably going to want to get in the door on forgiveness early because who knows how long it will take the SBA to get through these as they start to receive applications. So, if you're ready to go, you've spent the money, you qualify, you've done all of the restoring, you're all ready to go, applying now is likely your best option just so you can get an idea from the SBA before they get inundated with all of these requests that they're going to get. Okay. Some of these are very specific questions. is the date for number of employees at time of forgiveness the end of the covered period, or the actual calendar date that the forgiveness application is submitted? That one is the actual calendar date that the forgiveness application is submitted. Let's see. How do independent contractors work into the FTE and payroll dollar limitations? That's an interesting question. Independent contractors should not be included in your FTE count because they could have applied for themselves for a $20,000 loan to cover, 2.5 weeks of payroll. If you do have owners in the count, there's going to be a drop down that allows you to key in the number of owners, and then you would key in owner related salaries only if they're salaries. Draws aren't going to work. So again, independent contractors are not deemed to be employees, and you'll see that guidance kind of throughout the application. Can we elect a period of 8 weeks or 24 weeks, or is it one or the other? And if we spend more than the loan amount on payroll in the longer period, can we achieve 100% forgiveness, even if we have minor headcount reductions? That is a good question. If you elect 8 weeks or 24 weeks, it is one or the other. So what they're going to want to do is they're going to want to see what FTE count you have in effect at the end of the 24 weeks. So if you think you're going to be having to reduce staff by the end of the 24 weeks, but you're doing a pretty good job right now with 8 weeks, you might want to go with the 8 weeks. If you spend more than the loan amount on payroll, can you receive 100% forgiveness? That's a good question. It's not necessarily going to be the case if you spend all of it on payroll, that you won't be impacted by minor headcount reductions. But remember, on the easy form, it's the lesser of the loan amount, the forgiveness amount, or the forgiveness expenses, or the payroll expenses divided by 0.60. So technically, you could follow the easy form. If you were doing the full forgiveness application and you haven't reduced individual salaries for your individual employees, then your FTE count, remember, you can satisfy that requirement by saying that COVID has limited your ability to do something, right? There's an order, you have to have people outdoors doing their work, and then you would be able to qualify for that FTE reduction exemption. I hope that answers the question. Okay. If you use the 24-week period, do you still need to pay just 60% of the amount of a loan as a condition for forgiveness? Again, don't get hung up on the 24 weeks. It's really just giving you a period of time to spend 8 weeks worth of money. So it's not that you're limited by 8 weeks of money. It's just you're limited by eight weeks of money at the full capacity for payroll for what you did prior to the pandemic, if that makes any sense. So the way it works is you still have to meet that 60% threshold on what you spend on payroll. You don't get anything more because of the 24 weeks. It just gives you a longer period to spend it. Let's say you're operating at a third capacity or a third of your staff. It would take you 24 weeks to then spend the money because you're not at full staffing. So I hope that makes sense. The loan amount, again, was originally calculated based on 2.5 times your average monthly payroll. So it was actually calculated based on 10 weeks, if you think about it. But the reason why it gave you that extra 0.5% was because it was intended for other eligible expenses like rents and utilities. So that original loan amount still has not changed, and you're not going to get forgiven for more than your original loan amount. Their intent under the rule was never to give out more money to somebody that already had the 2.5 times their average monthly payroll. It was just to allow you longer time period to spend the money. Let's say you couldn't reopen your business right away. Okay. Based on the information we had at the time, we applied our PPP to our first pay period after funding. This included a few days of accrued pay as of the date of funding. That's an interesting question. It has to be expenses that you accrued during the covered period. So it's likely that might cut off. You would get credit for everything during the covered period, but I do not believe you get covered for the period before. That's a question that we probably should confirm. You can get credit if you're paid after, provided that it's on the very next pay period following the end of your covered period. If you choose 24 weeks, can we end and ask forgiveness within the 24 weeks once the money's been exhausted? Yeah. It looks like you wait till the end of 24 weeks, even though the money is exhausted, because they want to make sure that you've achieved that FTE count. You don't have to wait till 12/31. You'll want to key in your FTE count at the end of your covered period, and that's all automatically calculated by the application. Okay, if we pay someone FFCRA leave, does that count as a pay reduction or just a reduction? It's just a reduction of qualifying payroll expense. That's a really good question. You just can't count it in the amounts because it would be double counting it, but you wouldn't count that necessarily as a payroll reduction. Okay, should I list more expenses than what would sum up to the PPP loan amount in case any of the expenses listed are deemed not to be qualified? And again, I would encourage you not to worry too much about the other eligible expenses because the bulk of this is going to need to be on payroll for forgiveness. You're obviously going to spend a lot more during those 8 weeks than you receive the loan balance for. You have all kinds of expenses. It might not even barely cover your rent. So overspending is fine. You're only going to get forgiven though for the loan amount. That's the max you can get is the loan amount that you originally were approved for. You're not going to get forgiveness or additional loan proceeds for anything more than that original loan amount, which was based on 2.5 times your payroll. So even though you choose a 24-week forgiveness period, the payroll portion is only out of the 8 weeks. It's not out of the 8 weeks. It's just that you still can't get more than your original loan amount. And it's hard to understand how this works, but you might have an employee that is paid over 20 weeks during those 24 weeks, right? And that employee might make up the bulk of your payroll expenses that you submit on your application. But if that employee is getting paid for that time period, your other employees are going to have been reduced in order for it to make a difference. There still was never intended to be more than 2 times your average monthly payroll cost. What it allows you to do is if you're paying someone at a reduced rate or you're paying only half your staff, it allows you more time to spend the rest of that money. That's all it does. It doesn't give you more than the original 2 times your payroll cost. And then again, that 0.5 can be used for other eligible expenses. Does transportation include lease payments for your company vehicles? That's a good question. We believe that it's not actually a transportation cost. We believe that that would be covered under a real property or personal property lease payment. So it would likely be covered in the lease payment question under rent and lease. But we will confirm that. Okay. What if we've had to lay off someone since the end of the covered period? If you've had to lay somebody off, again, remember there's that caveat for you. If you haven't reduced salaries for individual employees and you have a COVID-related restriction because of a government mandate, then you qualify for a safe harbor from the FTE count. So in that case, you would upload the document that shows that you weren't able to operate and you should qualify for an exemption. An employee be counted if they are on an extended medical leave of absence? That's a tough question. I think that's one that we should probably address offline in our final question. Maternity leave. These are all very specific questions, so what I'll try to do is try to get those answered offline. And I'm cognizant of the time. I appreciate you all sticking on with me. Again, we didn't get through all your questions. I think there's about 10 more still open with a handful that we had emailed in. I apologize. What we will do is we will type them all up and get them out to you via email. And again, we thank you for joining. We thank you for choosing American Riviera Bank. And we hope that this has been helpful. Have a great day.